Welcome back to the channel, the Daily Forex. So in today's video, we're going to be trading on the Crash 1000 index, and I'm going to show you guys how to trade this market successfully and make profits within a short period of time. All right, now we're on the Crash 500 index market right now, and remember that if you want to make profit in this type of market, you need to calculate the amount of lot size you are going to use on the market. All right, the amount of lot size is going to determine the amount of profit and loss you are going to have. So if you have a smaller account, you might want to set your lot size to the smallest as possible if you have a smaller account, which is a low balance. But if you have a higher account, you might want to put your lot size, increase it a little bit high, so that the profit you're going to be making is going to be high. But also remember that there's a risk in the market, so the lot size will determine how much profit and loss you get. Okay, so now that you understand that, what we are going to do right now is to observe the market. First of all, you want to observe your trade analysis. Okay, remember that you can only trade this market using the use of analysis, technical analysis, and the use of indicators as well. You can't use the news or event to trade this market. All right, okay, we have zoom out. Now we'll call this level the zoom 0 level, and what we are seeing here is that this market is at the overbought. This market is at the higher highs. Okay, and if we take a look at this very point, on average one drop occurs in price series every 1000 ticks. So it means that if this blue line, if this green line counts up to 1000 ticks, one drop will occur on average. But we know that it does not always work all the time like that, right? So we're seeing here, market is at the overbought, at the higher highs. So we're expecting the price to drop up to this point. All right, the reason is that the market has been buying for a long period of time, and we're expecting market to retest and reverse up to this point. Okay, so if you're in the market, you don't want to place a buy at this very point. For beginners, please look at this carefully. You don't want to place a buy during this point. You will end up blowing up your account, because there's higher volatility in this market right now at this very point. So there's a higher chance that this market will continue to drop in price movement. Okay, it will drop. Now what we'll do is to go to the higher time frame to confirm our entries. We'll go to the 1 hour time frame first. On the 1 hour time frame, what we're seeing here, we'll zoom in a little bit. We're seeing that the market have bought for a very long period of time. You want to always do this analysis. From here you draw it upwards. The market have bought for a very long time, and you can see the pattern which is following. It sold a little bit, then it started going this direction, and now it has bought up to this point. And recall that this is the 1 hour time frame. All right, it takes 1 hour for a candlesticks to grow up to this point, and it takes days from here to this point, right? So now what is the next step? This market would sell, because we check on the 1 minute time frame that the market is at the overbought, and the market is almost at the same position in the 1 hour time frame. The market is almost at the same position. You can see almost at the overbought as well. All right, we can see that from here up to this point, it's still almost at the overbought. So we're expecting the market to sell. Now I've just confirmed our entry. Now we'll go back to the 1 minute time frame. This is where you want to place a sell entry at this point. You would place a sell entry during this position right here. Okay, during this point, because we're expecting price to sell. The market will drop in price movement during this point here. Very soon it might take few candlesticks for it to happen. All right, so we understand now that we should place a sell during this point. So to confirm this successfully, we are going to add the RSI, the related trade index indicator, on the period 14. We apply to close. The level is going to be on level of 90 and level of 10 on 4 pixels, color black, but you can use any color of your choice as long as you know what you are doing on the market. You click on done. All right, on the style right here, you put it on the color white on 1 pixel. You click on done. Now we just set the levels for the RSI, which is the level of 90 and the level of 10. Now you put on another indicator. You can put in the MACD. You can also use the average true range indicator. I'm going to put on the MACD so that you can see the inflow of when to expect the spike and when to buy the market successfully. All right, now put on the MACD. We'll put this fast EMA on 14, slow EMA 24, the MACD SMA on the level of 10, the main color on 4, the signal on 4 on 1 pixel. This first line right here, this first line right here, the color black. Here, color red on signal on 4 pixels. Done. Now, how do we know that this market would sell? Well, I've already see a good entry here for a sell at this point here. Market price has gone to this point here, and it made the market to drop in price movement. And now we're seeing another scenario at it happened right here. I told you guys that the market would spike. Take a look at it. If we zoom in a little bit, market has dropped in price movement. It's giving you a signal for a sell. All right, it has dropped a little bit, but we're seeing that there's a higher volatility at that point, and the chance of the market to drop higher is very high. Now we'll see here, price got to the overbought to the level of 90, and it retested up to this point, and it went again to the overbought, and it retested here again, and we are seeing that it's going here up to the overbought again, and when it gets to the overbought here, which is the level of 90, the price will drop. The price will drop for a sell. If it gets to this point, price will drop. We're seeing it going upwards again. All right, and I want you guys to know that this is the upward trend of the MACD. All right, that's the upward trend of the MACD, and whenever the upward trend of the MACD, when it gets to the level of 90, price is also tend to drop, which is to spike. And during the downtrend of the MACD, okay, during the downtrend of the MACD right here, we're expecting a lot of spike on the market. So right now, I've not seen the MACD start creating a downward trend. So immediately it starts creating a downward trend, that's when we are going to place our sell. But we're expecting the market to drop in price movement towards this direction. All right, now what we're going to do now is to add the bulls power indicator. We're going to add the bulls power indicator into our chart, so that we can look for a possible buy and sell entry position. The boost power on period 13, the style on 2 pixel with color green. All right, we have added the boost power indicator towards the trading analysis right now. All right, now on the boost power analysis, we can see that here you tend to place a buy at this point after the spike. Then when it touch this black line of the MACD right here, that's when you exit the market at this point. Remember that during the downtrend of the MACD on crash market, the market tend to spike. Okay, and if you take a closer look at this very point right here, you can see that the market spiked. After the spike, you take a buy, and when the MACD has gotten to this point here, when it has touched the black line towards the downward trend, that's when you exit the market. If you take a look at this point right here, during the downward trend at this point, you won't see any spike within this green line of the boost power. There was no spike here as well. So this is a place whereby you want to look for a possible buy entries. All right, this is a place whereby you want to look for a possible buy entries. There was no spike. Let me mark it for you guys so that you can see. Trace it downwards to this point. We're going to draw another line as well. All right, you can see from here to here. All right, there was no spike. From here to here, there was no spike. So you can get about 5 candlesticks from this very point. And remember to exit immediately the green line has gotten to the black line. I hope you understand what I'm saying. Take a look. The boost power and the MACD strategy is a very powerful strategy, guys. Here, during the downward trend, when the boost power start creating a downward trend, all right, it starts creating a downward trend, and immediately it has gotten to the MACD during the downward trend, you exit. The reason why you exit quickly is because during the downward trend of the MACD, it tends to spike a lot. All right, so this is how you avoid spike on the market and look for a possible buy entry, to scalp the market, taking advantage of small price movement from the market. And that way you can grow your smaller account into a big account. But always remember that there's higher volatility in this crash market, so the market tends to want to crash all the time. So this is what you should always put at the back of your mind, that this market want to always drop in price movements. The market is not friendly to you. All right, the market wants to make back its profits, so you should be very careful on the market, and you should also know the risk on this type of market as well. All right, so before you place an entry for either a buy or a sell, you should always do a proper analysis. Go to the 1 hour time frame, confirm your entries. Go to the 1 minute time frame to enter your entries. Then you use a good indicator. I just showed you guys how the RSI, the MACD, and the boost power works together for you to see a possible entry. So what you need to do right here is to go over to your account, your demo account, practice this strategy. Make sure you practice this. Make sure you practice it very well. You understand how to use this indicator very well before you try it, before you can think of trying it. Okay, you want to make sure that you understand it perfectly before you think of implementing it on your account. So also always be mindful of the risk, and also calculate the the amount of loss size you use and the amount of profit you will get and loss on the market. So always write down your capital, the amount you are willing to spend on the market, and set up that goal for that day. All right, so I believe after watching this video, you now understand how to trade this market using this indicator that I've shared with you guys. All right, so I'm going to see you guys on the next strategy video.